JB Cycles with an update on December the 26th. So the S&P is starting to break down from this 21-month band offset, and we have the 42-month average down here, similar to the 200-week moving average. So we should be breaking down here. The Nasdaq is behaving more similar to what I was expecting from the S&P. However, the S&P has been a bit stronger, but we see the Nasdaq is below the 42-month average and has already broken the 21-month offset, and we have a trend line going back to 2009, and we are about to break it. So I have some scenarios for the S&P. That we have a move down into June, and now we are in a sideways consolidation bear flag B move, and we are about to begin the capitulation C move down into the spring or even the summer or fall. And as we see, my 7-year cycle in red here is suggesting a series of down legs, and we could have the low around March, February, March, or in the summer or even the fall. We have been up here in the pain area for bears, but we couldn't break above the 200-day moving average, and now we are starting to break down. So I have my 4-week cycle. So here I have the S&P with many 4 weeks offsets. So if we look at the current position here and comparing with the previous cycles, we see in blue this one had a low down here around October the 10th. This one had an early low and squeezed up with CPI numbers, and the purple one has a low around here. So this could suggest that this area is the point where to expect the next 4-week cycle low. And looking at the average of the past 3 cycles here in purple, we see it is pointing down into early January. And if we look into hourly data, we see these half cycle or 2-week cycles within the 4-week cycle. This is the Dow Jones Industrial hourly data, and currently we are in such a 2-week cycle about midway, and this should be kind of a bear flag, and we could have a downtrend into early January, unless we have some kind of a New Year rally or a late Christmas rally going up here. But I'm looking for a breakdown into early January here. And we have the cycles. We have the 16-week cycle or 80 trading day cycle, which is the dominant one. I have one offset and a double offset, so looking at the 2 previous cycles, we are well below, and we should, in the bearish case, not break above these, but continue down into around February sometime. And we should notice the 10-week cycle in purple here is pointing up into early January, and then we are all cycles going down into around February. So although I have the 4-week cycle could suggest a downtrend into early January, we have this 10-week cycle allowing for a New Year's rally or squeeze. So we have to see which one is the stronger of those, but the 16-week cycle pointing down. And when looking at these are This is the average of down legs after a bear market rally, and we see the current one is in red here, and here I have drawn some kind of a scenario. I had the previous one down from the August highs here in dotted black. So if we are having a downswing into early January, that would be this red line by scenario, and some kind of pop up early January before the next 4-week cycle take us to a low in the end of January. That should not be the final low in this down leg. We would probably have the next 4-week cycle giving us another pop up early February before we get the final low in the end of February. Well, this could, well, we have to see how that develops. But that's a possible scenario in my view. Do I have anything else to show? I don't think so. That's, well, the last thing, I had the average of medium long bear markets in green here. They would have suggested the bear market is over and we have started a new bull market. So that was a possible scenario from these October lows, but the weakness we are now seeing is suggesting we are more likely in the scenario, in this blue scenario, which is the average of long bear markets, and this scenario has a low around the summer sometime. So it looks like, as the blue one is suggesting, we are about to start the capitulation phase and then a bottoming phase, spring, summer, making the final low for this bear market and 3.5-year cycle or 7-year cycle. And then we should start a new bull market, making a top around, well, can't quite remember, it should be around, well, let's find that. I don't know if I have drawn this cycle that far out. No, not there. Do I have it here somewhere? Do I have my cycle? Well, no, I haven't drawn it, but we had a top here that was April 21, so adding 3.5 years, then we get around late 2024 or winter 25. Yeah, spring 2025, winter 2025, around there could be the next bull market high. Although I do suspect that could be a lower high than the previous bull market high, or perhaps some kind of a double top. I do expect larger cycles here being bearish for this whole entire decade and maybe into the 2030s. But that's not to worry about at this point. So, see you in the next one.